So I wanted to share with you my mortgage webpage and kind of give you a quick tutorial of it. So I will put a link to this page below. But when you get here, you've got my information here on the upper left. On the upper right, you've got three different calculators that you have access to. The first is the mortgage calculator. Second, you've got the refinance calculator. And then third, you've got a debt to income calculator. And then this section of historical mortgage rates, this is as of yesterday, April the 7th, 2025. So not knowing when you're watching this, it's hard to say what the market will be, but just know that if these rates are crazy high or crazy low, it's because they're from April of 2025. So anyway, what I really wanted to show you was this section down here called Get Your Quote in Seconds. And so it's pretty self-explanatory, but I did want to walk through it with you. You'll start off with where is the property located that you're interested in purchasing. And so I'm going to pretend that I'm buying a condo along Turtle Creek. So 75219 is my zip code. My loan purpose, like I said, is a purchase, but you do have some refinance options here. So we'll leave that as a purchase. Now, our appraised value, I'm going to put in that it's $750,000. And the system is going to default at 20% down, but I'm going to do 15% down. And it's going to automatically calculate my down payment at $112,500. And then it's going to do the math of the 750 minus the 112.5 to come up with a loan amount of $637,500. So then my next line, I've got my loan type. It defaults to conventional. You've got FHA and VA. Here again, in my example, I'm purchasing a condo. So just know that not every condo is going to be available for an FHA or VA. So let's make sure that we're talking to each other if you're planning on using FHA or VA for a condo. Next field over, we've got our loan terms. The system automatically defaults us to 15, 20, and 30. We can toggle these on and off. I'm going to leave them on just to show you. But if you knew that you weren't going to do a 20 or a 15, you could just toggle those off and only one of those terms would appear, or whatever terms that you've selected would appear. And then you've got your amortization type. Most people are going to choose a fixed rate, but there's cases where maybe an ARM would be better. So anyway, you'll make that selection. I'm going to leave that to fixed. And I'm not going to hit search just yet. I'm going to come here and expand this to show the advanced options. So first up, we've got what's our occupancy? Is this our primary residence, a second home, or an investment property? Depending on the use, it's going to affect your interest rate. We've got our property type. Now, I've said that I'm, in this example, we're buying a condo on Turtle Creek. So I'm going to toggle that to condo versus single family. And yes, that will make a difference in our pricing. So units is 1, stories is 1. FICO, what if you know your credit score, you can throw your credit score in there. And then you can also key in your monthly income and your monthly debt and let the system do some debt to income ratio for you. If we had selected an adjustable rate mortgage up here, then we would have these fields be applicable. But in this situation, since we are fixed, then these aren't going to apply. Now we've got a couple of options here: interest only, self-employed toggle, and a first-time buyer toggle. So just know that if you're a first-time buyer, that means that you haven't owned anything, you haven't been titled on a property in the last 3 years, at least the last 3 years. Obviously, if you are self-employed, you'll want to toggle that. And now we're ready to click on the search button. So we're going to use this search button up here and let the system do its thing. And here we are. We've got our 15, 20, and 30-year mortgages. We've got our P&I, principal and interest. We've got mortgage insurance because we did a 15% down payment. If we had done 20% or greater, this amount would be 0. And then we've got our interest rates of 6.3, 6.8, 6.9, our APR, and then we've got our points. Now, each of these points scenarios are negative, so those are lender credits. And the last column here is your estimated loan costs. And so this 1,300 is calculating the fact that you've already got this $1,000 credit. So that would be your loan cost. So anyway, let's come back up here and let's say that we're going to change this to a house. So this is where you get to play around with things. So now I'm doing a single family. So single family, that's going to be a house. It could also be a townhome versus a condominium. So let's see what rates do when we click on search. We had 6, 3, 8, and 9. And I click search again. And wow, I went from 6.3 to 5.9, 5.9, 6.4, and 6.6. So you can see that the interest rate went down when I changed from a single family to, I went from a condominium to a single family. So anyways, that is kind of the things that you can play around with if you would like. And one other note is on these points, if this point was a positive number, then it would be a fee. But again, that fee would have been calculated into this estimated loan cost here. So anyway, they're just spelling out what your points would be and then what your loan cost would be. When you're ready to move forward, you can click on this button down here at the bottom, which is Customize My Rate. It causes you to create an account. You'll be connected to me, of course, because you've come in through my dashboard, and you'll start the process, which is filling out an application and uploading supporting documents. So if you ever have any questions about the process or what's going on, feel free to reach out to me. But again, I just wanted to give you a quick walkthrough of a tool that you have available to you.